Sounds good.
So I'm starting recording and okay, so our founders, they start joining us and we will wait a couple of minutes and then start the conversation. Marus and I, we are in Miami right now. And it's windy and rainy, not the typical weather.
I missed the first part of that, but I relate to the rainy and windy. Here is the same. It was sunny about 2 hours ago. I don't know what happened now.
It's the chaos of this post-eclipse era.
Yeah, unfortunately.
We're now experiencing the anomaly, the astronomical anomaly, and everything is in chaos.
Yeah.
So I kindly ask our founders to stay muted while they're joining, and if you have questions, you can put them in the chat and we'll do our best to address those questions. Waiting for the audience to fill in. Has anyone seen the full eclipse yesterday? I can admit I missed all of it.
I didn't even know how to. I didn't even know how to catch it. I don't know why. It was a complete surprise. I woke up the day after. I was like, yeah, apparently I missed it.
Yeah, so I only catching up in social media, seeing all those reels and posts and beautiful pictures, by the way. I saw Vadim joined us. Hi, how are you?
Yeah, hi everyone. I'm doing great. How are you?
We are awesome. So we're still waiting for the audience to fill in. And
how many people signed up?
40 something, right?
Mm-hmm.
So that's pretty much the usual average number for the webinars for founders. And while we're waiting, we were discussing the eclipse. Vadim, have you seen it yesterday?
I didn't get why so many people were interested and were willing to carve out their time to look at it. The last time I saw it was when I was 11 or something. So I was busy.
That's interesting, like how a lot of people refer that they've seen eclipses in their childhood a lot more often than nowadays. I also remember like a couple and it wasn't such a big deal.
Yes.
But it's an event for social media, so
no, of course.
people discuss it and make interesting jokes. So while we're filling in, I'll give you a brief description of what to expect. This is our virtual event. We are Katya and Marusia, founders of House of Pitch, an attention marketplace where you can pitch your companies or ideas or services to anyone you want and get a response, a yes or no response from them. Happy to see you. And we have incredible panelists with us today. Thank you for joining us. I'll give you a minute to introduce yourselves, and then we jump right into the conversation. Thank you, and we're recording this, so I hope you don't mind. If you need the record, just let us know. And if you missed it, you can always catch up on our YouTube channel. Thank you for being with us, and let's hear from our guests today. So we have Arian, Jacopo, Mikhail, and Vadim, and they will introduce themselves. Arian, let's start with you.
Perfect. Hey everyone, I'm very happy to be here today. It's the first time I'm coming on one of these webinars, so it's quite exciting, and I'm looking forward to seeing how it's all going to go. Especially the pitch thing is quite exciting. Normally, it's not so interactive, where you get to sort of say yes or no, and it goes very well with the brand, obviously, as well. So let's hope we're going to get some of that. But my name is Arian. I'm living in the Netherlands at the moment, and I originally discovered House of Pitch, and that's how we sort of connected as well, and decided to do this webinar. So very exciting. And I'm currently running a venture studio with a focus on media and software. And essentially, we developed the same frameworks and sort of systems that we can apply to all these different ideas. And we try to keep it in a very, very relevant niche. And how we differ from similar firms doing a similar thing is that essentially all our ideas are relatively synergetic, and it forms a full circle model. So essentially, if we take on a project by working on that particular project, we tend to aid the progress and improvement of the entire network of startups we've got under our network. And that's a very brief sort of description of how it all works. I'm happy to hear what the rest of the panelists today do as well. And yeah, thank you for having me.
Thank you. Jacopo, how are you? And let's hear from you.
And you're on mute.
Yeah. Let me unmute you. So for some crazy reason, I cannot unmute you involuntarily. Somehow you have to do it.
Maybe try changing the microphone that's connected to the Zoom conference. Well, you'd have to do it on your end.
Okay, let's give the floor to Mikhail while
hi all. Yeah, glad to be here. Thanks for inviting. I'm based in Bonn, Germany. Last year, actually, by the way, I was in Netherlands. Yeah, glad to be here. I'm representing Republic. I'm helping them with seed and Series A stage startups, mostly B2C, D2C. I'm also recently joined First Momentum Ventures in Germany with focus on pre-seed deep tech projects. Yeah, thanks a lot for inviting. And yeah, probably that is all.
Thank you very much. Vadim.
Hi everyone, I'm Vadim Rogovskiy, based in New York City. I'm a 3X founder. I sold my first company, shut down my second company, spent the last 7 years with my current company, and still running it. All these three companies are B2B SaaS, selling into enterprise. At the same time, I also spent 2.5 years as 2.5 last years as the partner of a VC firm called Geek Ventures. We raised $23 million to support immigrant founders on the US market, mostly running B2B SaaS companies, and already invested into 43 companies to date.
Awesome. And I have the first quick question to you, actually. Do you invest as an angel or just through the ventures that you're a partner in or joined professionally?
So I'll provide a bit longer answer. So like this pure investment side, yes, it's only as a on behalf of the fund, but recently, I mean, because we almost finished to invest out of the first fund. I mean, we're still gonna be investing actively in the next 3 to 6 months, but I already started to think like, what's next for me? Because and I decided, so I started to work on something new, like, and the new concept is going to be the company. You can think about it as like a micro PE fund that is going to acquire VC-backed startups that cannot raise more capital according to current market environment, or want to be basically to switch to cash generating model, or in cases when founders are pretty exhausted and they want to move on. And now there are no ways for them to get a way out and no way for shareholders to receive at least any liquidity. So with a few partners, we're working on the concept of that we already started to look at the first deals. So yeah, this is also a thing that I'm working on right now. Yeah.
Thank you for clarification, Jacopo. I hope
now
we can make
can
it.
you-
Awesome, we can hear you.
Yeah, sorry, I don't know what happened. For the first time, I couldn't type and move my mouse anymore on the laptop. So sorry for that. So it's very nice meeting you and thank you for the invitation. So my name is Jacopo. I'm from Italy. I'm currently in Milano, and I work in the university-based accelerator named Bocconi for Innovation. So it's the accelerator of Bocconi University. And what we do, we invest in agnostic startups at the very pre-seed stage, and we accelerate them thanks to all the resources of Bocconi. So we involve them with students, alumni, professors, and the network, overall the network of Bocconi and the university itself. And we support them through the scaling, and then attached to the acceleration, we have an investment fund where we follow their growth.
Thank you very much. And the topic of our meeting today is the alternative fundings to traditional VCs. And we have an accelerator, a venture studio, a crowd invest platform, and the classic VC. And we will hear about all the differences and similarities and advantages and not so. And let's start with Arian. So you run a venture studio. Can you tell us more about the characteristics, like what the venture studio is and what's the difference from the traditional VC fundings? What are you specifically looking for, and why should founders consider a venture studio rather than a VC funding, in what specific cases?
Of course, yeah. Well, venture studios as a whole, it's quite a new concept, not in the sense that it hasn't been around, but in the sense that it's only now taken a different shape or form to it. And that only came after sort of the increased efficiency with people being able to run their startups in a much leaner manner, and doesn't require as much fund, it doesn't require as much time, resources, etc. So there's a lot of people that are sort of on the higher end normally that now put their efforts in a more diversified manner. And it's just a fancy name. The fact that the bottom line is that for most cases, it's just a fancy name for a holding company. But there are naturally certain characteristics that set them apart and really sort of draw that differentiation between holding companies and venture studios. Now, to answer your question specifically, obviously it's a completely different game, right? If you go to a VC, then naturally you're sort of going the traditional route, et cetera, et cetera. But with a venture studio, more so you're seeking a partner. It's almost as if you're seeking a firm as a co-founder, right? And that's the package that we offer as well. Now, a lot of it, obviously, they have to consider their sort of resources as well. And one promising prospect for founders is that also opens door towards a further partnership with the venture studio as well. So, for example, if they've got all these other startups under the network, or if they've got certain ideas where they're hiring for founders in residence, or however it may be, by a founder approaching that venture studio, then they certainly open certain doors for themselves into their further future as well. So in that sense, that's one of the main sort of benefits that you can get by going after a venture studio. And normally the startups that come to us, at least, it's not necessarily that they're looking to raise funds. It's more so they look at the situation that they're in and they sort of analyze, all right, cool, maybe we're lacking a bit on the marketing side of things. Maybe we're lacking in terms of our network. Maybe we just don't know how to sort of go forward with our product. And they have certain weaknesses and vulnerabilities that need solving to some level. And that's the main motivator for them approaching us, not necessarily the funding. Obviously, any startups under our network, we fund as well. And the day-to-day operations, they all come out of our venture studio unless there's some sort of other arrangement where we have a minority stake or however it may be that is not necessarily too focused on the funding aspect. But yeah, essentially there's a lot of other benefits that come with it as well. Now, how we choose the startups that do approach us and potential partnerships is that we, as I mentioned very briefly earlier on, is that we choose startups that are very synergetic with the rest of the assets and resources and startups that we've got under our network already. Now, the concept of a venture studio is naturally very simple to execute, but you need certain almost cultural points that make you distinct from other competitors, right? And for us, how we do that is that we try to achieve the best sort of efficiency we possibly can as a network entirely, not on a per startup basis, but as a network. And we try to keep it very closely related, at least for the next couple of years. Obviously, 5-10 years down the line, that's going to change. But at this time, we try to make it go sort of full circle where each individual startup has certain points of improvement that it shares, or some common ground that it shares with other startups that come to us. And that way we can ensure that, all right, cool, we've got 2 assignees on certain projects and then you've got other founders working individually, as opposed to them going their separate routes. And, that's sort of the traditional way of doing things. And that's how it would normally be done. At least this way, by one of the startups progressing, you build certain assets, you build certain knowledge bases, certain contacts that you can then utilize for other ones as well. So we're very, very careful in terms of the opportunities that are presented to us, because we also don't want to lower the quality of the network. And we'd rather pursue something that, and we don't have this approach, I guess another thing where it differs from VCs is that we don't go for 1,000 different opportunities and hope that one is going to sort of blow up and it's going to turn into some unicorn that pays off for the rest. As opposed to that, we try to sort of be very conservative with the projects that we pick. And if we do pick something, we try to commit as much as we can and make sure that the chances of success are as guaranteed as possible. And a lot of philosophies go into that, such as, I can expand on these maybe with further question a bit later, so I don't take too much time on one answer. But for instance, we've got a philosophy that we look for vulnerabilities, but not liabilities. And there's a whole sort of distinction between how we define the two. And this way we can at least guarantee that the bets we're making is as safe for the entire network as possible. I hope that answers the question.
Thank you. How many deals do you usually do a year?
Well, it really depends on that level also, because it's quite a new firm. Evernomic is quite new. It's only started 2 years ago, so we don't have enough data to really put a answer to that specifically. Now we have 14 startups under management, 3 more that are launching within the next 3 to 4 months. So that'll bring it up to 17. And we've got a few contracts that are also a bit different than sort of the normal deals that we take, but these contracts also sort of open doors for us to be able to provide opportunities to the startups we've got under our network. So I guess in the last 2 years, if you average down, is around 10 deals, but that's not going to keep, the pace is not going to be kept up over time. Obviously, when you're earlier stage, you do a stronger push in the beginning, and then much of it goes into maintenance. But we do project that from 2025 and onwards, it will be around 2 deals per year that we're going to add to the network. So it's a lot less aggressive than most VC firms, and it's sort of about consolidating and growing the existing network and picking new opportunities when they arise.
Got it. Jacopo, the question to you about accelerators. When founders think about accelerators, the first name that comes up is Y Combinator, probably a couple of 2. And then there is an awful lot of accelerating programs. How founders should feel, like how they would choose, how would they decide whether they should go or shouldn't? What is an accelerator in your terms? And is there a synergy with VCs, or you're in a competition?
Yeah, it's a lot of question. I will start from what is an accelerator from my point of view. So I think we are the habilitator for founders. So we really start from their beginning of their journey. So sometimes they just have an idea. So that's our case. So we run 2 programs. One, it's without investment. One is with investment. The one without investment is a free program for 20 startups every 6 months. So they have an idea and we support them in 3 months to see whether this idea is for their life or not. And so I think that's the first goal and the first mission of an accelerator. So it really support the entrepreneurs. So I call them in this way. So they want to be, but they're still not. And then we have the acceleration program, so the typical one. And when we drafted ours in 2019, we used as a benchmark Y Combinator as well. So that's the main one to keep it as a reference. I think if you look at Y Combinator, you should be kind of based, or you want to do business in US. So for example, from our founders, is not something they have as a goal, especially in Italy. And then in this way, we basically take very, very early stage founders. They know that these things is for them. They already have few metrics, and then we basically support them in scaling, and we want to support them in connecting with all our network, full ecosystem, and break down barriers. So we work a lot with VCs. So we organize a lot of interaction with VCs. We organize demo days. For example, I drafted together with a colleague the VC office hour. So every 2 weeks, there are two VCs coming to our office. They do half an hour coaching to our startup in the acceleration program. And in total, we have around 16 VCs coming in 4 months to our office. So yes, we work a lot with VCs because we are not in competition. We are right at the beginning. And then we believe that without them, they cannot scale properly if they need the money to grow. And speaking about the last part about how they can choose among accelerators, I think it's a matter of whether the accelerator is vertical on some topics. Like, for example, we're agnostic. That's why we support right at the beginning of the journey, where you don't need to have an expertise on the industry, for example. While if you are a bit more later stage, maybe you're looking for some accelerator having like a vertical experience, partnering with some corporates. So usually that's the case. So it depends on what you need, in which stage you are. If you need like vertical expertise or connection, there are those those accelerators / VCs, because sometimes they are in this way, which are supporting right in that industry. If you really need a 360-degree overview of the entrepreneur ecosystem or how to scale, going to an agnostic one is very good. And what we see is that there are a lot of first-time founders, a lot of tech founders. So, for example, spin-off of university coming to us because they need a 360-degree overview of how to scale their business. So it really depends.
Thank you very much. And you told that you support a lot of first-time founders and founders with just an idea, so no product, no MVP, no concept proved. It's interesting what you're looking for in founders, because when you only have a great idea and you don't have previous exits, like we see again with Y Combinator, they prefer second-time founders and founders with exits, or like Google, Amazon, or other major big tech companies, ex-employees. So how do you see the potential in a founder if she or he has no previous experience? What are your indicators of the future success?
Yeah. So the first screening is very fast, as always. So we receive around 1,000 applications a year. So first of all, just 60% is about evaluating the founders. And the first thing we do is how they've done their application process. Because we have like a few questions, we have like comprehensive set of questions and things they have to upload. And if they already done that in a certain way, means they are rigorous and they know where to want to go. So that's like very superficial and basic screening. And then the second thing we do is really going in depth with the founders. So we look at how they are complementary to each other, if they have the expertise to execute in that market. So we look at founders market fit. And then we usually do a first call, and then we see how they behave. And even if they don't have all the things right for in that moment, that's why they want to come to an accelerator. We just look in how they interact with each other, how they base their assumption on, if they, for example, they already done some validation, how they done so. So if, for example, they just run a survey, we compare them to someone who just basically, for example, we had a case with one wanted to sell a new product, and this guy just basically went inside McDonald's and tried to solve. So we look at all these kind of aspects, but mainly at the founders, 60%, 70%.
All the personal traits like persistent,
Yep.
focused, and everything else. Thank you. Michael, tell us about Republic, the crowd invest platform. You're probably one of the most famous in the market, and I have a lot of close friends who actually raise funds on Republic. And also it's a very good brand. So the branding strategy was amazing, and a lot of things Republic pioneered in the industry and worked with regulators. So can you give us an overview? What is it, what it's for, and how to benefit of all your efforts to succeed as a startup founder?
Yeah, sure. And yeah, actually, I initially I joined Republic, and in general, I got familiar with the crowd investing concept somewhere around 2016. And at that time, it was more about like some kind of alternative way to raise funding, in particular, mostly for B2C and D2C projects. And at that time, crowd investing was considered as a way to raise funding for probably not so strong projects. Republic really put efforts in changing that, and also, as you mentioned, from a regulator part, because like previously, startups may raise funding up to 1 million. Now it's 5 million, and also Republic acquired its European competitor called Cedars. And during the last like several years, the quality of projects really improved significantly. Since I also have like previous startup experience, for me it was really very critical to understand and also to like communicate the benefits startups may get and what kind of startups. So if talking about the focus of Republic as a crowd investing platform, because there is also like a VC division called Republic Capital that is targeting mainly deep tech and space tech projects, but we are now talking about the crowd investing platform. So we are targeting seed and Series A startups, so post-revenue stage, ideally starting from 10, 15K MRR, mostly B2C and D2C, and I will explain you why. First of all, because for many investors, like B2C or D2C project is something that they can try on their own, or for example, see on the streets. That is something very clear for less experienced like venture mini investors. That is one of the reasons. The second reason is actually probably the main one, is that while raising funding for your project, you can also both convert Republic's mini investors into your loyal customers or ambassadors if it's not your target audience, and also bring your audience and try to involve your community in case you have one. Because, for example, you have a cool product, customers like it, and for you, it's important to work on retention, for example, and you would like to involve them more. So they would be usually quite excited about the opportunity to become your mini investor. As for me, I mean, I had a bit different use case, because as a user, my use case were more about interacting with more experienced entrepreneurs there. And yeah, that was also one of the like options mini investors has. But also one thing I would like to mention is that among Republic's mini investors, there are quite many really experienced people with a corporate background that may be interested in making interest in really promoting your project as much as possible. That is about the benefits, but as I mentioned, for me, it's also important to highlight that for B2B projects, it's less relevant, even though we had really quite a lot of successful fundraising campaigns coming from B2B projects as well. But I would recommend crowd investing, first of all, to B2C and D2C projects on seed and Series A stages. And also one more, probably last thing I wanted to highlight is that, like, because of Republic's efforts, both from a marketing and regulatory perspective, also quite many US venture funds are following successful fundraisers and campaigns happening on Republic. So you may also consider it as a like product hunt for software solutions, like quality mark that may also help you in your fundraising as well. So yeah, probably that is all. Yeah.
Amazing. So VCs like B2Bs and crowd invest platforms, they focus on B2Cs. So there is a sort of equilibrium here. Vadim,
Definitely.
a tricky question to you. As a classic VC, how do you think fundable projects are if they're coming from a venture studio, the accelerator, or previously raised funds on crowd invest platform? That's the common notion that it's a bit harder or maybe significantly harder if the project funded their first round with these alternatives and then want to come to VCs and get classic price rounds with them.
That's a great question. Like, I'll happy to provide my my opinion on that. Yeah, but it's and I guess it's going to be very relevant for founders because very few people talk about it publicly. Because we haven't invested in any startup that came from venture studio. It's not because we didn't want to. Some of them were pretty good or they fit our thesis, but usually venture studios just do not understand long-term economics of startups because they break their cap tables, right? As soon as we see that after the startup is raising let's say seed round, and it was created in the venture studio, and venture studio owns more than 20%, we immediately pass, because in venture studios they prefer to say that, oh, we are value adding co-founder. I mean, that's bullshit. It's not a co-founder. It's a venture studio that is going to be useless after your seed round. It's just dead equity sitting on your cap table, right? Because you need them only in the early stage. Yes, of course, because founders who cannot start on their own, they come to venture studio and they get a lot of support. I get it. But then after seed round, I mean, only the biggest venture studios, and I think now it doesn't make any sense for me to launch new venture studios because there are already very big venture studios like Atomic, like I don't know, I forgot the name, but there are big AI-focused studios like AI Fund, etc., etc., etc. So they already can support founders all the way up to Series A. I believe in this model. When venture studio has enough capital to support the founder until the Series A, it means that venture studio will have enough equity retained, like before the Series A. But so economics would work. And I also understand that to do that, venture studio has to have a lot of capital. And also for venture studios, their business is about attracting the best CEOs out there. So the venture studios with the biggest brands, with the most well-known brands, will win because they will attract the best CEOs. If you attract subpar CEOs, you'll get subpar business. So probably this is pretty obvious. So I think we look at every startup out there that fits our criteria, but if we see that the cap table, even if we invest, but then Series A investors wouldn't invest. So why there is no sense for us to come in. As for accelerators, I mean, it's we invest in a lot of startups. I mean, I cannot say a lot of startups that have accelerators on their cap tables, but and we are not. We try to be not very receptive to Y Combinator bias. That, hey, we have to invest in the startup because it went through Y Combinator. We try to stay calm in this situation, but we have at least one or two post YC startups, and I personally, like, my company went through Boost VC, and also we got some early check from 500 Global, and I'm also a resident mentor at 500 Global, so I know accelerators in different roles. I think having an accelerator is good when founders really understand why they need specific accelerator as their partner, because if it's only because of money, it doesn't make any sense, because accelerators, the money you get from accelerators is very expensive, because it usually takes 6-7% of equity for what, 100K check, or so the money is very expensive. So it has to be something more like beyond money, right? And not a lot of accelerators can provide value in long term, not only in a very early stage. And lastly, in terms of crowdfunding, it's the same thing. I think crowdfunding is a great tool when it can also like first of all, not for everyone. I think it's a great tool for B2C startups, because it's not only a tool to raise capital, it's also a tool to get a lot of let's say early adopters, a lot of customers, to spread the word.
Yep.
Yes, because if it's only for capital matters, probably not the most effective tool if it's only for capital, like accelerator. But if it's in terms of marketing, it's like Product Hunt. It's also an investment, right? So it's all if you, I mean, but it can, if done properly, it can bring a lot of high quality users. The same with crowdfunding, because when startups just resort to crowdfunding just because that's the last option for them, I think it's bad, and we immediately see this. But if it's more strategic move, definitely, I do not think that smart VCs would oppose to invest companies after they raise equity, after they raise crowdfunding.
Thank you. And it was very interesting to watch Arian's reaction to the first spot. So Arian,
I think we can make some emojis.
Yeah. We will make Telegram stickers out of that. What do you have to say?
No, I mean, oddly enough, I don't disagree with a lot of the things that you mentioned, and I mean, Vadim, some of the points are actually quite fair. And when you look at how we conduct business, is rather different than how, let's say, Atomic conducts business. And that's why I prefaced it in the beginning with my introduction that sort of venture studios are evolving. They haven't been around for a while, but the meaning that a venture studio holds now is evolving a lot more with the nature of business as well. And it's sort of taking a form in terms of holding companies as well that have a unique approach and have a much more sort of comprehensive scaling plan. And those are now falling under the same category. So it's very, very different in terms of how things have been done in the past. So in terms of, for example, how Atomic operates, and it's very, very different than how we operate as well. And for Evernomic specifically, obviously I mentioned that Evernomic has only been around for 2 years, and we do focus mostly on early stage startups. So we haven't reached the point with any of our startups that we're considering an exit, or we found the need to raise funds, but all the startups we have under our network are bootstrapped. And well, because they came under our network, if you don't count us as an external investor. And the fact is that we don't offer a deal that's solely based on some sort of financial or monetary investment we make into the startup as well, right? So obviously someone has to pay at the end of the day for the day-to-day cost of it. And there are startups that we're partnered with where we don't pay a penny of any of their costs, nothing like that. And it's simply on like an operational level that we're involved in. And startups that we have founded under our network ourselves, then in that sense, then we fund the whole thing as well. And we consider that naturally bootstrapped, because we're not going to any external sources of funding, and it's still founded under Evernomic. And up until this point, all have been bootstrapped. And for the foreseeable future, we don't really consider going into any sort of discussions to raise funds from external sources or going to a VC. And maybe at some point, some of the startups obviously will reach a point where they need access to resources that we can facilitate ourselves, which is fine. And at that point, obviously, it'd have to be considered. Or if we're looking into an exit from one of our startups on the network, that's fine as well. So obviously, yeah, our approach is a little bit different to Atomic, and it's also a lot more personalized. Now, we also do have this understanding, and it's a point that he mentioned that I actually agree with, that at some point, then we naturally, the impact and the effect we have once it's past the early stage point is a bit more passive than most of them claim to be, which is fair. But yeah, at the end of the day, we have a lot more personal, as like the approach that we take towards the startups is considerably more personal, and it's a lot more in touch with each individual startup, and we try to contribute genuinely as partners that are on the operational level as well. and open new doors, etc. And as I mentioned, it's also very synergetic in the sense that the startups we have now, anyway, I can't speak for 5 years into the future, but the startups we have now, anyway, the benefit they get just because of the affiliation they have to our personal networks, to the other startups that we've got under management, etc. For them, that's a benefit that they can't get anywhere else either. And that's something that sort of compensates for anything else as well. So they would want to stick under the same sort of ecosystem and under the same network to try to move forward in that sense, because it's much more efficient and they've got access to a lot of the resources that they need. And I do believe that anyway, within the next 5-10 years and perhaps beyond that, is that we're going to see a shift into more bootstrap startups and less sort of traditional approaches to the so-called traditional VCs. And it's sort of the same, it goes back to the same conversation that we see a lot of bigger names sort of talk about how they're betting on when the first unicorn is going to come out with a single person running the company. And obviously that's something that famously Sam Altman said, not that I don't necessarily think is going to happen anytime soon anyway, but the fact is that it's a widespread sort of realization that we are going towards a more efficient ecosystem or business landscape in general. I think teams of fewer people, teams with less capital, teams with less resources, if they're strategic enough and if they're sort of accounted and accounting for every step and the consequences that has, I think they can grow their startup and go a lot further with a lot less. So yeah, I don't necessarily disagree with any of the points Vadim made. We do things a little bit differently naturally, so it doesn't have the same approach as Atomic, for example, or Founders Fund or any other bigger names. But other than that, I think it's quite fair and calculated.
Awesome. Mikhail has something to add to that.
Yeah, I mean, I just wanted to put both Vadim's arguments and Arian's arguments as well, because the thing is that I raised funding from Venture Studio, and also I faced the challenge Vadim mentioned when I was working on the Venture Studio side, helping a seed stage startup to raise funding from venture fund. And the cap table was disaster, that's true. The thing is that now I really see more and more venture studios with more flexible approach, and they understand, as Arian knows, like the challenges that may appear, and in case they go for external funding, then they are a bit more flexible with the cap tables sometimes. I also believe that it will change and it will evolve, as Arian mentioned. And also, I suppose, for me, as when I was first-time founder, Venture Studio was really the place where I got some kind of co-funding, because I was not able to get secure quickly. So I received this expertise from the Venture Studio side. And also, I knew that Venture Studio won't need external funding. So it was a bit separate case. So in this sense, it depends on both founders' experience, on both what is probably industry, what is the focus. But yeah, for me, it also feels like one more track to use, depending on your needs, your experience. So yeah.
So the answer is be strategic. Don't do things just because you can. Think about why you're doing them. Jacopo, do you teach first-time founders about all those convolutions in your accelerator? Like, what is the ratio of like practical things and theory you put, especially thinking about first-time and less experience and like very young founders that usually go to your accelerator? A lot of times we hear that accelerators give you some obvious things and just like lessons you can just watch on YouTube. What is your approach to that?
Yeah, we experience all those criticism and from outside and from inside, and so we build up on that. And so I said before, we have two programs. So the pre-acceleration is the one where we support the one with an idea, just an idea. So for them, we have 3 months of theoretical lectures. So basically, they're really real lectures every Saturday morning online, both online and offline, where we have like experts and professors of Bocconi giving them lectures on the financial model, the business model, what does it mean to hire, the problem statement and the value props, so everything. And then they go in detail with mentors So basically, we give them an overview on theory, and then we go in depth with a mentorship, and then with our support. While in the acceleration, so going back to the traditional acceleration program, we don't do any theoretical support. We support them on bi-weekly sprints. So we have with them every 2 Fridays, we work with them on sprints. So we pair 2 startups together. Every 2 weeks they change, and we work on what they've done in the last 2 weeks, what they will do in the next 2 weeks, how we can support. So, and based on that, we customize our support in the following weeks. So we invite some experts on some matters. We connect them with, we have a pool of 200 mentors. So we connect them with the mentors they need. We invite the VCs they need. We create workshop, inviting like sometimes famous founders that, I don't know, they had the issue on scaling their team. So we gather the feeling that our startups, they had the problem with scaling their team and doing the first hiring. So we invite those entrepreneurs to join us in our co-working. So more theoretically based if we're looking at the entrepreneurs, and more practical based if we're looking at the founders, like real founders.
Thank you. And one last question before we start the most intriguing part of our event, sorting pitches. It's to Vadim. I saved all the trickiest questions to you. Does an early stage startup need a financial model? Let's once and for all decide, does it or doesn't it?
I think it's not because it's not, yeah. I think the short answer is yes, they need, but what is the goal? The goal is probably not to use this model in order to judge the startup by the view of the but basically to judge the to keep the startup accountable regarding the goals that they have for the next 5 years, because anything can go wrong, can be different, etc., better or worse. But financial model will like to like at least from our perspective will help to understand how entrepreneurs. So it's not about what, it's about how they approach this, and what assumptions they have in place, how they build it, how conservative they are, how optimistic they are, or just how what, like, have they counted all the variables that are important for their business? How do they treat unit economics, etc., etc. So so it's mostly about how than about what, but definitely this is an important thing to have.
And if the founder says, "Oh, it's too early, we're just proving the concept, we don't have a financial model," on the first call or on the second call, what's your reaction will be? Asking them to make one, or the pass?
I can think that no, I'm not going to blacklist the founder immediately, right? But I think if it's pre-seed, then maybe, I mean, if it's pre-seed, if nothing is, it's basically like an inception phase, and maybe they're just doing some customer development and just testing out some assumptions. Yeah, probably too early for a financial model, because you don't even understand what is the product you're gonna offer to the market, what is the value prop. But when we talk about when there is this, and seed pre-seed, obviously it's very vague sometimes. But if you talk about startup that already has first revenue, maybe like a 5-10K MRR, right? Then there are some, as soon as startup starts to charge money, I would say maybe even a few thousand in monthly recurring revenue, then there has to be some, there have to be like essential financials, like basically P&L, budget, cash flow, right? Like GAAP standard. I mean, this is like obvious 101, like basically startup 101 for founders, right?
On the obviously side, just like money in, money out, like the major spending. Like how
and
much
it's not for investors.
We have until we don't have any money and have to raise
it's
again.
Not for investors, it's for them, right? And then they start to play with different financial models, different assumptions. I always suggest that they need to have 3, like very conservative, really optimistic that they use in order to set up sales goals and growth goals, right? And maybe something in the middle, right? and then they just show it to share it with investors, but they need to have it. When they need to do it, to prepare it quickly to share with investors, it's not good.
Okay. And maybe just one express question, just one line to all of our guests. What would you immediately blacklist the founder for? Only honest answers, starting with Arian.
So essentially, what's like a one-liner thing where
Like
we just
immediate
immediately
ban,
reject the
yeah, for doing something like immediate no to a founder if she or he does it.
the character of the person. If we get a very, very bad sort of vibe from them, that they're not honorable, that they can't be trusted as people, that they don't have the very foundational characteristics that you need to be a good person, I think that would be something that would set us off immediately. And especially in our case, is very relevant because we work with them closely, and it's much more important for us for them to have the character than the competency. So that's something that's very important. So if you get a bad feeling, then I think that's
Nice.
done for them.
Michael, for you, like, what would happen if you recommend the founder don't go further with Republic?
That's a good question. I would suggest probably it will be something building. It will be something about building a social app or something like that. Yeah, even though, yeah, for sure there is still probability to scale up and become, I don't know, next Snapchat, Zenly, or something like that. But still, it's like, yeah, probability is too small. And each time I see in House of Pitch something like, yeah, new social app, something like that, for me, it's like red flag. Besides probably other things related to AI tool that is actually proposed as a solution, not the instrument to solve customer pain. But that's a common thing, I suppose, for others as well.
Thank you. Jacopo, what I have to do for you to reject me immediately in the accelerator?
Push me a bit too much, so start writing. So we have many, since they're first-time founders, they write on LinkedIn, they write on email, they knock our door, they continuously push us, and that even if you're a good one, then for me it becomes a no-go immediately, because it means I cannot work with you, because then at the end we all base on a relationship, because in the acceleration we just stay with them the entire days. So yes.
Nice, thank you. And Vadim, for you, what is the deadliest mistake a founder can do?
Yeah, I think in order to like disqualify, I mean the founder from the further processes, I mean even not for example, when instead of the founder, you get an outreach email from a fundraising consultant or chief fundraising officer or this kind of bullshit, right? And this is just, I mean, I don't know.
Everybody's laughing.
I don't know why people still do it. I don't know why people still do it. I don't have an idea, right? Or when really like when or just in general when it's not CEO who is doing the outreach and who is coming to the first call, at least when CEO delegates it to someone, chief of staff or whatever. I mean it's 5-person company, 10-person company. Why CEO is not coming to fundraising call, right? Or when there is a group call, like when there is CEO and a few co-founders, and CEO is the quietest person in the room, and basically only like CTO is always kind of speaking, etc. You're like, maybe something is wrong here, maybe there is a problem, and it will explode in a few months, right? Yeah, and these are just very kind of, I would say, like things that are seen on the surface. And in general, when founder comes to the call, like a machine with a goal to pitch, not for a conversation, to get to know investor like as a human being, right? But more like a transactional, and then time to run for the next pitch. It's immediately failed. I mean, and it's no go. Yeah.
Thank you very much. I apologize for the noise. The life goes on around me. Someone's fixing something. And let's pitch. So let's come to your House of Pitch accounts and see what we have there and your reaction to those pitch cards that our founders sent your way. Let's start with Arian. You can share your screen.
Yeah, one second.
I gave a permission to that. And
I think this should do it.
Awesome, we can see it.
Yeah.
Yep.
Okay, perfect. There we go. Right, let's see. Okay, how comprehensive do I have to be? How do you want to play this?
Yeah, you can just do it your normal way because it's
Okay.
very interesting for us. How much time
Okay,
does it take
and
for you to
As
decide?
natural as you can.
Yeah, what you're looking at first, like how you decide on the card.
okay. Self-verification and instant checkout, okay. Self-verify your HP with just your bank account. No apps, downloads, registration is needed. Okay. Well, just immediately speaking, it is a bit out of our niche. So that's one thing, but I'm not going to put too much emphasis on that because naturally it's going to be very rare to find something that's perfectly within our niche. But this is immediately a bit of a problem for me. I would normally obviously look at the founder's profile as well. We'll do that now. This is obviously another problem. The pitch deck isn't available, so that's one thing. But yeah, not to take too much time from this as well. I think firstly, the design of the website overall, I think can be improved as well. Obviously, I would have to look at the pitch deck, which isn't available, and that's sort of the main thing. And there's small signs as well, like this one, for example, made on tilde, etc. This wouldn't be something I would give too much attention to, especially because it's also not in our niche. But I'll just note this one in case the pitch deck alone should be a good enough reason. And how many are we going through, by the way? 5 each, yeah?
Yeah, you have 8. I mean, you can go through 5 and then
Okay.
8 jump to Jacopo.
Okay, and well, is it an answer that I can say that this is a field that I'm completely clueless about? So I would immediately sort of say, no, it's not even something
Yeah.
I would spend time on.
Yeah,
Okay.
that's also valuable. Like how investors react to the pitch card if it's out of their thesis or geography or anything else.
Yeah, it's completely out of our verticals as well. It has to be somewhat sort of related to the portfolio we already have, naturally, for it to be valuable.
But it's a cool startup, I will add.
This is something that's a field that I'm completely clueless
You
on.
can actually share a pitch card, by the way, with a colleague on your platform. Here is this share sign at the.
Oh, really? Is this a thing?
Yep. So you
Oh,
can
I had no idea.
like
Oh, this is very
investors
useful.
and then share with anyone you think it's relevant to.
Oh, that's very useful. Okay,
Yeah, I also didn't know. Yeah.
I'll be using this. It would be nice if they included the link in the pitch deck. Yeah, what I would say first things first, just to look at the pitch card. Firstly, obviously, it would be nice for them to include the pitch deck, etc. And also, it would be great for them to, even if they're not going to include the pitch deck necessarily, it would be great for them to include what it is exactly that they're seeking as well. I mean, it's great as a description of the startup, and even if it is great, you know, I have to reach out to them with a pitch now. I have to pitch them. It's like that now I've got no clear line of sight in terms of what I'm supposed to work with. So that's first and foremost. I mean, even if the startup looks great, I have no clue what it is that they're lacking. I have no idea what it is they're looking for necessarily. I assume obviously they want to raise funds, but I've got very little information to go on. And also, well, I guess the contacting sort of happens through House of Pitch, which is unique. That's thanks to you guys. But if it wasn't on House of Pitch, then I would also have to figure out how to contact them. So that'd be a problem as well. But yeah, that's the sort of feedback I would have for this one. And I would have to go in much deeper to sort of understand exactly what it is. But it seems like an interesting idea. I would like to learn more about this. Let's just put it this way. This, since they haven't mentioned, it's fine as well. So I'm gonna click connect on this one.
Nice.
Okay, this one we'll skip. But it's
This is
a
us, by
connect
the
straight
way.
away. Yeah, House of Fish is a immediate connect. I'll tell you. AI-based software for drug discovery. It was again. This is a field I'm completely clueless about. Let's skip this. Why did I click connect? It was habit. Providers. Okay, this might be something. Okay. 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 Okay, it's good that they're including some sort of information there. So this is nice as well. This section is very good. I do sort of have this, but then this is a very, very personal thing. It has nothing to do with being sort of on the book, but I do have something against using emojis in these sort of designs, but they can slide. It's not a massive deal breaker. I would like to move to the team section mainly. Second. Okay. Hang on. Work and feature development. And this is actually good for them to mention. This is a question that I end up asking after anyway. And it's good for them to sort of point out the next steps. Okay. All right, then I would just have a look at the founder's profile as well. They're based in the Netherlands. That's positive. Well, this person seems to have ended their at least affiliation with Ask Guru to some extent. Ended in November 2023. And what is education? This person didn't even put it on. So I guess the main person is Alexander, which I do like that he's had some sort of relevant experience anyway, at least in some bigger names. yeah, I mean, I would be open to having a conversation with them. This is reliant on the fact that they also match our, so in this case, they don't match our niche again. But if they were to sort of integrate well with the network, then I would have a conversation with them as well. Is it okay if we pass on the floor as well? Because I don't want to take too much time with the whole webinar.
Yes,
So I
yes.
think it's, yeah, is that okay?
Let's pass
Okay.
this to Jacopo.
You guys, may I go next, please? Because I have to run. I'm already a bit
Awesome.
late for my
Yeah.
next call. Yeah.
Let's do that.
All right. So you will share the screen, or I will share.
You can share your screen
Okay.
for convenience.
Of course. Sure. Just okay. I'll do it now. Yeah, I have just 3, so it should be fast. All right. Right. So you can see my screen, right?
We can.
Cool. Okay. Yeah. So I just checked this one. It's a B2C app. So I mean, we just don't invest in B2C apps. Just invest in B2B only. It's more like an app, more like a feature that is distributed via the app. So I don't see actually a lot of business there. But maybe it's just not very relevant for us, right? But maybe it's still. I mean, I just don't see a venture scale business here. But it could be just a great small business for someone, right? Right. Oh, I know roughly. I mean, so we are looking at them right now, actually. So I can say, and we spoke to Ivan very recently, so I can say definitely connect. And okay, let me open the deck. All right. So I just cannot open it like in a new. Okay, in a new window. Yeah, so here we go. Yeah, okay. Yeah, I mean, mental health is tricky. I mean, there are a lot of startups emerging in mental health, but usually they struggle with unit economics. But we were not very convinced about any of them. But I don't see any technology here actually. Like, I mean, this is not a technology actually, but yeah, I mean, again, it's B2C. Maybe it's a fit for angels mostly, right? But just not for us because and of course, yeah, of course, we see just multiplying by 10, by 10, by 10. Here we go to the moon. Yeah, just come on. Yeah, and I also love these competitive slides like that. But yeah, the deck needs work. It's nice. The style is nice, but definitely a lot of slides need work. It's just not our piece of cake, I would say, right? So probably that's it. Yeah.
Okay, thank you very much. And it's actually a rare pleasure to watch you sort those speeches real time. It's so genuine. I love it. I just love it.
That's a great exercise. Yeah. Thank you. Yeah. Thanks for setting it up. Thanks for having me. And let's stay in touch, guys.
Thank you so much. So, Jacopo, let's see what you have on your House of Pitch feed and how would you react to the pitches that you have there.
Let me know if you see it. You see
Yes.
it? Okay,
Yes.
good.
Yes, everything's great.
So, so the first one is basically the first thing I do, I just look at the title and I think it's well organized. I really like that they're already showing how much revenue, how much metrics they have on fundraising, which is their sector, and which kind of demo they've already done. So for me, it's already something interesting. Plus, it's fitting because it's well ahead of the acceleration program. But since we are an university, we can also invest in edtech. So for me, that's already something good. The description is just like, I think it's a very concise and one-liner of value prop, highlighting again the metrics on the users, on the revenue, and how much they left on the round. They don't have a pitch deck. So since I kind of interested in the sector, I just quickly go on their website. And I mean, when I go on the website as the others, I just look at a bit of the design, and then if I can find easily the co-founders, and then I just look at the co-founders. Usually I go at the bottom. This one again is made with tilde. So go on LinkedIn, people. Sorry, that's in Italian here.
Poor Tilda has a bad name today in our conversation. So don't build with Tilda, guys. That's somehow a red flag.
No, I mean, sorry, let me move it. Okay. I see that she has some experience in the healthcare. So just kind to understand what does it relate to education, but I think doesn't matter at this point here. So I just going. So I don't know, when I have the first feeling when I don't see like a proper, maybe it's my bias, but when I don't see like a proper tag of CEO, co-founder of Course Factory, now I found it, but if it's not straight, I just lost my attention span.
Maybe it's LinkedIn fault that it
Yeah.
doesn't show it to you.
Yeah, anyway, I'm
Yeah,
kind of,
let's
I
be
don't find all the
Berlin today.
information. Yeah, I don't find all the information needed at first, but I think if they already plan this kind of flashcard with this all well written information, I think it's a go for me. And then that's already opposite of the previous one, so that's already just deal flow, and it's already a no go for me. So
Yeah, and
I
it's
don't know
just
what it is. I
like
think
an
it's
email, like a letter, and we
yeah.
address our founders that it's a completely different format, and you have to skip
Yeah,
all
that's a program
hellos and
manager in
goodbyes.
yeah.
Yeah, just keep to the point.
Yeah. That's sort of like a value prop explained, so it's not very focused explaining the metric as the previous one. But again, here I cannot find a pitch deck. I cannot find a link on the website. It's a no-go. So that's already a more eye-catching one-liner here. So I kind of understand what it is. There are many players in this field, so I just want to understand what it is a bit more in detail. So if I had the pitch deck or the website again, I could have like understand a bit better. Especially in US. So I think in Italy we're not a good one for having them on OpenAI or ChatGPT. No go. That's a bit more interesting since it's kind of like a trend topic. So longevity, Alzheimer's. So it's something having an impact, and we really care about that. So since we don't have like an investment thesis, we really want to go focus on edtech or in something having an impact on the planet or on society. So that's something a bit more related. But again, I don't find all the information, so I cannot even. Maybe I can just take his name and just to have a look on LinkedIn.
Another tip for our founders: include as much information as you have at the moment, even if it's a teaser, pitch deck, or a landing page, or some information about your previous endeavors as the founder. It will be very helpful.
Yeah, in this case, I don't really, I don't know, and sometimes I don't want to waste time, so I just count on numbers. So maybe I can go. I don't know how many I've done, but I can go till the next. I can a bit relate a bit more.
Okay, I think after this one we will
Yeah.
jump to Michael. Yep.
So overall, again, here I cannot relate. So I don't find the information, and I really think if I can go back on time and find the first one was really kind of the best. Despite they didn't have the pitch deck, I think it was really clear. The website was amazing, and the LinkedIn profile were amazing. So if you don't want to put the pitch deck, I think the first one was good. I always like to see the pitch deck because it seems that they completed the application properly, and that was one of my first criterion when I was selecting. So that's another no-go. Okay, here we have one. So I will have a look afterwards.
Thank you. Thank you very much. And Michael, you can share your screen
Yeah.
and let's see what House of Peach has for you.
Can you see now?
Yes.
Yeah. So yeah. Even though I was telling about the creator economy of social app, but here it feels like it is more like a way to see it from a different angle, and also probably to help users to monetize their time, even though it's a challenging space. But there are good signs. There is a pitch deck website. Yeah, quite nice for the Gen Zs, I suppose, probably. Yeah, I'll try to be quick. Okay, yeah, pitch deck. I'll go quickly through it. The document is not available. I mean, even though the document is not available, and even though like creator economy is quite a challenging one to enter, I will probably say yes, just to be sure I haven't missed something. Yeah.
That's an interesting thing again for our founders. If you have one tiny misstep, but you've done everything else perfect, you still have a chance to have the investor's attention, even if something is missing.
Yeah, one more thing I also wanted to mention, probably I'll place it here, like in case your profile is filled with the picture, your profile photo, etc., it also brings additional credibility. But it's a minor thing, but also, as you mentioned, it makes sense to keep that in mind. So efficient tag conversion. Yeah, even though yeah, AI space is becoming more and more a red ocean now. Probably I'll go to the website. We'll try to understand it better. I suppose, yeah. Let's check LinkedIn. Yeah. I mean, the company looks quite big, if the information is correct. I'm not sure if they are fit for seed or Series A, or probably it's just part of their business. The other issue is that probably it's not relevant for us. Yeah, so looks a bit controversial. Feels like we're combining different things. Yeah, it seems like it's like one of the products they are rating for. There is also a pitch deck there. No, it was a pitch deck. I mean, for me, it's probably no, because of our focus and because it's really not very clear if it's a startup or a company. So yeah, no. Through smart concepts, understand. The Earl understand had B2B SaaS for Pro. I mean, yeah, no numbers here and no signs, no some kind of quantification, or I don't know if it's pre-seed, probably some kind of validation side, and no link to the pitch deck. Even though it, despite being B2B SaaS focused, it could be potentially relevant for Republic because it could be also B2B2C. I mean, yeah, if using this description looks not so good, but I will, in this case, I will probably double check just to be sure I haven't missed something. And probably I'll just check the LinkedIn as well, but yeah, since we are limited in time, just, yeah, let's say yes. This project, I know already. They are really quite experienced, so I would just click yes. But they are not relevant probably for the public. Yeah, let's probably make the last one.
I agree.
Yeah, I actually met them. The team was quite good. So here I'm a bit biased because there is no link to the pitch deck. At the same time, they show them the numbers. So that's really great thing. And they have a website, active one. Yeah, and actually the pain they're solving is quite good. So I would say yes. And the next one I will check after the call.
Thank you. Thank you very much. Fantastic conversation. I enjoyed it a lot. And we will give all the tips to the founders. So next time they have better chances with our investors. And I hope you learned also something that you can share any pitch card with other users or as an external link. You can actually send it out to anyone and they will receive it in this beautiful format that we created with Marusia. Thank you so much. And
Thank
see
you.
you soon with our future events. Have a wonderful day.
Thank you.
Thank you very much.
Thanks a lot for
Bye bye.
Thanks for having us. Take care. Have a
Thank
good one.
you.
Bye.